The street gives up opening gains with the Nifty stumbling below the 25,700 mark, with the broad indices seeing largely flat moves. IT once again gives up gains seen in the previous session. Durables and real estate also drag while PSU banks hold out.
Brokerages stay constructive on Infosys post the AI day. Motilal Oswal and Nuvama retain buy calls with target prices up to 1,900, seeing a $300 to $400 billion AI services opportunity by 2030. Morgan Stanley stays equal weight, flagging execution and monetization risks.
Dabur has announced a top management reshuffle by appointing Harjeet S. Bhalla as CEO and redesignating Mohit Malhotra as whole-time director and global CEO. The move signals a leadership transition as the company sharpens its domestic execution.
In Q3 earnings for Nifty 100 stayed resilient with revenue up 9% on a year-on-year basis, EBITDA rising 14% and consumer services, defense and durables leading the revenue growth, while oil and gas topped the EBITDA gains. Profit surged in auto and defense but weakened sharply in FMCG, realty and power. Labour code impact stood at 15,000 crores, denting the PAT by nearly 5%.
Hello and welcome. You're watching Buy Now, Sell Now. I'm Kavita Thapliyal. With me is Ankita Saxena. In next 1 hour, we'll be focusing on your stock-specific strategies. That's right, a show where you can ask your questions and we will get it answered live by our experts. We'll also be joined by a lot of management owing to stock-specific, company-specific updates, Ankita. But then before that, let's quickly flash the number, the WhatsApp number, where you can directly reach out to us and send across your question. That's flashing on the screen, 865-797-4571, the number where you have to just send across your questions, write on the name of the stock, the price at which you've bought it, and the timeline you want to hold that particular stock for. We will give you a fundamental and a technical view by our experts who will be joining us live. But before we do all of that, let's quickly get a check on the market where, both the major indices are trading lower after the opening that we saw. Gains in metals, PSU stocks are really providing slightly upward movement, but still we are looking at Nifty trickling down below 25,700. A sharp sell-off in IT stocks following a relief rally that we saw yesterday. Sectoral performance, if we have to just focus on it, it's pretty mixed that we can see. Auto is really flat, Nifty Auto. Nifty IT definitely down 1.5% in today's trade so far. But then look at Nifty PSU Bank. That is one index that's really trying to hold on to, up almost 1% that we can see. Pharma definitely in pressure today, almost 0.25% down, but FMCG is trying to hold down. Specific stocks are doing well today with 0.5% move on the index as well. Metals definitely shining in today's trade, almost more than 1%. But reality has beaten down. Even media is not doing good today. And let's also look at healthcare and oil and gas, which is flat, but defense is again 0.25% up. Let's also look at the stock specific action where cigarette stocks definitely are buzzing. We can look at Godrej Phillips over 10%, VST over almost 2.5%, ITC up over 1.5% in today's trade. But that's all. Even Strides Pharma, before we go on to Ankita, 2.5% gain. Company has completed acquisition of remaining 50% stakes in IT services from Nivitin Softtech. So, Ankita, the market definitely is not able to hold on to the opening gains that we saw initially. And yes, IT Pack, which was the headline yesterday, is beaten down. When stock specific, Infosys is almost down 2% in today's trade as well.
Absolutely, Kavita. In fact, it's a complete sell-on rise is what we are seeing, profit booking that's coming across the IT sector, especially after that rise that we saw yesterday. And of course, the flip side, metals that were on the back foot yesterday are today the sectoral gainers. So some buying on dips as far as metals are concerned and a bit of a profit booking coming in on IT. But let's move on and talk about TVS Supply Chain that's in focus now. TVS Supply Chain is in focus as it has signed an MOU with Italy's ALA Group, and this is for India's aerospace and defense space. And let's get a detailed view of what this MOU looks like and the contours of the deal and how it's likely to benefit TVS Supply Chain. Let's get on board Ravi Vishwanathan, who's the Managing Director, TVS Supply Chain Solutions, who's now joining us. Hello, Mr. Vishwanathan. Good morning and thank you for joining us today.
Good morning, Ankita. Thank you.
Mr. Vishwanathan, what realistic revenue potential do you see over the next 3 to 5 years from this partnership with ALA, given that India's $28 billion aerospace and defense space opportunity?
Right. If you look at it at the 28 billion opportunity, the supply chain typically is around 10 to 12% of the overall spend. So that's really what the addressable market size is. And TVS Supply Chain Solutions has a very strong experience having worked in the defense sector in the UK. And therefore, we have a wealth of knowledge and a lot of technology and systems in play when it especially comes to sourcing, procurement, optimization, and distribution. And that's the capability that we think that is very relevant in the Indian context. And signing an MOU with ALA, which is an Italian-based aerospace and defense specialist in the supply chain space, gives us deep domain expertise in the aerospace space, and therefore it positions us very well as the market expands.
Sure. Mr. Vishwanathan, hi, this is Kavita also joining in. When we talk about specific gaps, could you please elaborate on, the specific gaps in your current aerospace capabilities? Does ALA bridge also particularly in production supply chains and OEM relationships?
Right. I think the OEM relationship is really where ALA's partnership comes very handy, because they have a very, very strong set of relationships with the OEMs who supply, especially into the aerospace sector. Our strength comes in the sourcing, procurement, and distribution space. So the ability for us to come together and therefore create that value is really what the opportunity is. And if I look at it purely from a systems perspective, I think the TVS SCS technology platforms are very strong platforms which can complement the capability that ALA Group brings. And therefore, we think it's a fantastic coming together of two very complementary partners.
Vishwanathan, how soon do you expect this MOU to translate into firm contracts? And are there any advanced stage discussions that are already underway?
Yes, I think we expect to convert a couple of opportunities going into the next financial year very early. And that would give the basis on which we can further strengthen the MOU into a more meaningful relationship, which is what we ultimately want to get to. And that's what we have said in the PR also, that we are evaluating how we can engage as two independent entities coming together. And we would look at all partnership possibilities, including possibly a JV going into the future. And that we will evaluate on the basis of the first few engagements that we will execute.
Sure. Could you also help us understand that will scaling this vertical require meaningful capex in warehousing, compliance, or specialized infrastructure in India?
Definitely, it will involve setting up of facilities which will facilitate picking, and specifically when it comes to systems integration, that is where we do sub-assemblies. Yes, it will, but early opportunities are going to be mostly in the sourcing, procurement, and the distribution space. So the capex, we don't expect the capex run up maybe into the next fiscal, but going beyond FY27, clearly there is an opportunity for us to scale it up by setting up what I would call more automated warehouses. So those are things in the plan.
The aerospace supply chains, while it is margin accretive, it's very compliance heavy. What EBITDA margin profile do you target versus your core logistic business then?
It should be at least 50 to 100 basis points better than the core logistics business, because aerospace and defense in general for us, if I look at it from a UK perspective, gives us better EBITDA margins than the rest of the business. So we expect that to be replicated going forward. And that's the thesis on which we have put together the plan for the 4% PBT and beyond as we progress beyond FY27.
Sure. Also, company has announced the acquisition of Swamy & Sons 3PL. How is this acquisition expected to alter your client mix and margin profile?
I think that's a great complementary capability that we acquired. We have very strong presence in the production supply chain, in the industrial side, and in the FMCD businesses. FMCG has been a white space for the company, and the acquisition of TVS, Swamy & Sons by TVS, gives us that great potential to address that white space. It is done completely through internal accrual, so it's a very good use of the funds that we have, the cash that we have. And secondly, it is margin accretive in the near term, meaning we expect it to deliver better margins going forward into the next fiscal. So as we close FY27, we expect Swami and Sons to contribute positively, maybe between 25 to 50 bips coming on the back of the FMCG businesses that we will acquire through Swami and Sons.
Right. On that note, Mr. Vishwanathan, thank you so much for taking the time out and giving us the contours of the deal. Thank you so much.
Thank you so much, Gita and Kavita.
Right. Let's move on and talk about the space that's buzzing, tobacco stocks that are buzzing away, as source suggests that the market leader, ITC, could increase cigarette prices by 20 to 40% across brands. My colleague Snehi is now joining us with the details of this.
Well, yes, the cigarette stocks have been in focus, but ITC is one stock to talk about because we understand from exclusive sources that ITC is planning to increase their cigarette prices anywhere between 20 and 40%. That is the extent of the price hike that they're looking to undertake to try and dodge or mitigate the impact of the hike in GST as well as the excise duty that has been slapped upon the sector by the government. Now, the new cigarette shipments are likely to hit the market soon is what sources are telling us, and they're also saying that retailers are selling existing inventory on ground at higher MRPs, citing this increase in GST. This has not already been done by ITC. The price hikes will be undertaken to the tune of 20 to 40%, and these shipments will be hitting the market soon. Just to understand a little bit about the background, just to bring our viewers up to speed on this, the government had notified 1st Feb as the end of the GST compensation cess structure and the start of the new tobacco tax regime, under which cigarette stocks were placed from the 28% GST slab all the way up to 40% GST slab in the sin goods category, and an excise duty was also slapped on the sector, which when quantified comes to the extent of rupees 2 to 8.5 per stick of a cigarette stick, depending on the length of that stick. We also have brokerage notes that have kept these cigarette stocks in focus. This morning, UBS came out with a note on ITC wherein they've maintained their buy rating but cut the target price to 395 from 420 earlier. They say that their distribution checks indicate range of imminent price hikes is now arriving, and that is now what we're telling you exclusively as well. They've also spoken about what the extent of the price hikes could be for the different lengths of cigarettes. ITC's 84mm cigarettes is expected to see be priced at 24 rupees per stick from 17 earlier. This segment has seen the steepest tax increase, while on the other extreme, the 64mm length is expected to be priced at 7 rupees per stick from 5.9 earlier. And BNK and Incred also came out with reports yesterday saying that overall profitability hit for both of these, or in fact all of these listed players in the cigarette space, could be mitigated on account of price hikes undertaken. And now we have exclusive sources confirming that ITC is looking to take a price hike between 20 and 40%.
All right, Snehi, thank you so much for all those updates. And definitely headlines are actually coming in from cigarette stock also. But then it's time for a short break, and post that we'll be joined by Hemant Kapadia, Avinash Korakshkar, our experts on the show, and we'll be answering your stock-specific queries. Before we go on a break, let's just also flash our WhatsApp number so that you can note it down and send across your questions.
Welcome back. You're tuning to Buy Now, Sell Now, and it is now that time of the show where we get all your stock-specific queries answered by our experts. Let me get on board Hemant Kapadia, who's a technical associate, DR Choksi FinServ, was joining us on the technicals, and from a fundamental view, Avinash Gorshekar is a market expert, is joining us. Hi, Avinash and Hemant. Thank you so much for joining us to answer all our stock-specific questions. And we also have a caller who's now joined in, Vijay Kirti, who's from Chennai, is now joining us. Hi, good morning, Vijay Kirti. Tell us what's your question.
Yeah, this is regarding the REC stocks I hold, because it is now under the severe erosion. And I am just asking whether we can switch from REC to Power Finance Corporation, because the merger is announced, which will be beneficial. Just to keep with the REC or merge with the PFC or switch to PFC, or totally book the loss and invest in something else. These are all the options I have.
Right. Interesting. Right. Vijay Kirti, thank you so much for your question. Avinash, let me come to you. Now with the REC and PFC merger announced, he wants to know, he has REC that he's bought at a buying price of 607. He's clearly sitting at a loss. Should he now probably just, book his loss, get out, or perhaps switch to PFC, which would be a better bet post the merger? What should he do?
No, I think as of now, the merger has been announced. I would suggest that, rather than switching to PFC, which is at a lower level, I think it's better that he holds on till the entire merger is culminated, because obviously, the merger is going to benefit both REC as well as PFC shareholders. I think in the short term, the market has reacted negatively to REC, and I think markets are now looking at a more favorable structure for PFC. But I think the merger ratio has not yet been announced, and I think it's better that little more clarity comes. So probably in the next 2 to 3 months, by March quarter, you will get to know this, and I think that time would be an ideal time to take a call. But I think he can continue to hold to REC, because obviously shareholders of REC are going to be offered new shares in the consolidated entity. So rather than panicking, I think wait for some time. The fourth quarter is also going to be equally good, and that would be a good time to evaluate. Till that time, it's better that he holds on.
All right, Mr. Vijay Kirti, is there anything else you want to ask our experts?
Thank you. That's it.
All right, thank you so much for asking your question. Let's move on, and we have a WhatsApp query coming in from Sushila Bileri, and she says that she has Adani Power at 153. She wants to know what would be the targets for long term. Avinash, I'll come to you for that. What's going to be your take looking at her buying price?
So I think, Kavita, in this case, I think most power companies are long gestation kind of, players. Adani Power has recently decided that not only in India, but even countries like Bangladesh, they would be putting up power projects. So my sense is that, rather than taking a short-term call, if the investor can wait for the next 12 to 18 months, I think definitely Adani Power is one of those players which is very aggressive in adding capacity, has got a very good funding structure. So I think continue to hold. I think, one could look at targets of 175, 180 year, but over a period of 12 to 15 months.
All right, moving on from Adani Power to the next question. That's coming in from K. Guru, who's writing in from Chennai. He says he's booked his profit in BSE at 3,100 rupees. Now the stock has corrected. Can he re-enter, or what are the right levels to re-enter? And this would be for the period of 1 year. You mean, interesting question. Now that the RBI draft rules have come, we did see that drawdown in all these companies like BSE, Angel One, MCX, they corrected fair bit after that. He wants to know that he's already booked his profit, but can he re-enter, and what are the right levels, and what would be your view for the next 1 year?
A very good morning to you, Ankita. Thank you for having me on the show. It's a pleasure. You're right. These rules and changes have seen BSE post a fresh all-time high and reverse almost immediately. One needs to keep in mind that we've been on an uptrend for multiple years. The stock is getting a bit heavy at higher levels. I'm not exactly convinced about how things pan out. There's one important level to watch out, which is 259095. A weekly close weekly close below this could mean further weakness. And if he wants to buy, currently it's not a buy, but then if he wants to buy, there are a couple of levels. One is 2377 and the other one is around 2035. Like I said, it's getting heavy, not looking very convincing. And if this level breaks, I think there's going to be further pain. So there's no rush in buying back.
Russian buying over there. But then, Avinash, let's also get a fundamental view, and not only BSE, what's going to be your take on the entire capital market space, Avinash?
No, Kavita, I think in the short term, this is definitely going to impact the broking companies. But I think this regulatory announcement by RBI is going to largely affect the proprietary books of many, participants. It's not going to impact any other segment that badly. And most importantly, you must understand that Indian capital market is a kind of a market which is growing rapidly. So maybe in the short term, there could be a jerk, maybe for a quarter. But I think over the longer term, companies like BSE, the asset management companies, wealth management companies, the depositories. These are all big opportunities where a lot of wealth can be made. So BSE actually would be in the limelight because very soon NSE would be making its IPO and NSE share would get listed on the Bombay Stock Exchange. So my sense is that if somebody has a time frame of at least 1 to 2 years, I think any weakness should be used to accumulate these stocks because the long runway for growth is very promising, and I think good money can be made even from current levels.
All right, thank you so much for that view on the capital market theme. But with that, it's time for a quick break. Don't go anywhere. After the break, we'll keep getting your questions answered, so stay tuned. Hexaware partners with Reapers to accelerate AI-led enterprise app development. Ola Electric gains after the Bombay High Court stays a warrant against CEO Bhavesh Agarwal. And Dilip Bilkon emerges as the lowest bidder for a 702 crore Narmada project.
Tobacco stocks rally on ET Now's exclusive that ITC may hike cigarette prices by 20 to 40%. New shipments are expected soon, with retailers already selling old stock at higher rates. UBS says hikes should offset the new tax regime and limit impact on volumes and margins.
And on day 3 of the India AI Impact Summit, global AI leaders, including the former tech giants like Google and Nvidia, will headline research keynotes with sessions on sovereign AI infrastructure, trusted data collaboratives, AI for public good, inclusive workforce readiness, and international governance models. ET Now will get you insights on scaling AI ethically across healthcare, education, defense, and national systems.
All right, welcome back. You're watching Buy Now, Sell Now, and yes, we are answering your stock-specific questions. We have Himen Kapadia and Avinash Kodakshkar as experts who are answering your stock-specific queries. A lot of queries trickling down on WhatsApp. Let's take this one. This is from Ms. Nagini from Hyderabad, and she says that she's a senior citizen, have bought 5,000 shares of Gujarat Gas, and she wants to understand the future prospects of the company and till what time she should be holding. Currently, she's not in need of any money, so it's more like an investment perspective. Vinash, I'll come to you. Any specific take?
No, I think Gujarat Gas, if the investor can hold on for the next 12 to 18 months, I think they are into the, gas business, both for the industrial users as well as for the residential users. And they largely operate in the Gujarat market. The company has a large dominant shareholding by its collaborator, British Gas. And I think, in terms of the numbers, in terms of the growth opportunity, I think gas production is increasing steadily. The government also wants to encourage clean energy, and to that extent, Gujarat Gas is very well positioned. So I think if the investor can hang on for the next 12 to 18 months, it's a good risk reward bet, and I think the investor should hold on if the investor does not require funding immediately. We expect better numbers for FY27, and definitely the investor can hold on.
All right, so that's the view coming in on Gujarat Gas. Let's move on to the next question that's coming in from Ron from Mumbai. He says, this is specifically for Himen. He says, he wants advice on Tata Motors commercial vehicles and Tata Motors passenger vehicles. He wants to know the ideal exit price. He says the time is not a constraint, though he's not given us his buying price, the entry price, but he wants to know the exit price, and he says that the time horizon is not a constraint for him. Himen.
Okay, yeah, Ankita. Firstly, Tata Motors commercial vehicle it's a split, so relatively not too much of data. Whatever data I have seems to suggest data I have is just a fourth one, not too much to go on. But whatever data I have, we are in a medium-term uptrend, high tops, higher bottoms. It's almost at all-time high, so I don't have any levels to give him. But at the rate and speed at which we are continuing, if we don't close below 465, I believe 530, 540 would come first. And talking about Tata Motors passenger vehicle, one gets the feeling that it's been down for some time. A base formation has been made. About 390 things should start looking good. Worst is over from a medium term point of view. Okay, targets the way I see it, 390 and 410. two possible targets. Time frame would probably be 6 months. And if he's looking for a longer term time frame, I think one can expect a target of approximately 510 or so in the next 12 to 15 months.
All right, so that's a take on Tata Motors PV and CV. But then let's move on. This is Mr. Chakravarti, and he wants to know about Renuka Sugars. He bought it at 24.67, 400 shares. He wants to know if he can buy more on dips and then hold it. Avinash?
No, I think Kavita, as far as Renuka Sugars is concerned, currently sugar prices continue to be weak. In fact, even on the ethanol side, we have been finding that most of the producers have been saying that ethanol prices have not been raised of late by the government. I think overall the longer term opportunity looks good. I think Renuka Sugar has a very large sugar and ethanol capacity. So if he's looking at the next 12 to 18 months, he can definitely accumulate at these levels. Most of the negatives are in the price, but I think for the stock to get re-rated, you'll have to wait for a couple of quarters of good numbers put out by the company. So yes, he can add, but he's got to take a time frame of at least 12 to 18 months.
All right. So that's the word coming in on Sri Renuka Sugars. But let's move on to the next counter. This one's coming from Harendranath. He's a long-term investor. He's writing from Chennai. He says he has 108 shares of IRCTC at an average price of 785 rupees. He wants to know if he should accumulate more or should he wait? Let me come to you for this one, Himen. Should he be accumulating this stock at the current levels? What would be your advice?
I would say you should wait a bit more. I would be more comfortable accumulating the stock at between 560 and 580. The stock has done nothing in the last 3.5 years. Currently, doesn't look like doing so. Yes, it's oversold. Downward momentum is slowing down. So I'd stick to what I said. Can buy further at 560, 580. Not exactly at current levels.
All right, this question is from Vishakhapatnam, and Mr. Satyaveni is asking about TCS and Infosys. So he's holding TCS 160 quantity at 3849 and Infosys at 1704, 123 quantity. He wants to know if he can average it and reduce losses, and maybe if he wants, if the recommendation is to hold on to both of these counters, what should be the target? So let's understand a technical as well as a fundamental view. So Avinash, I'll start with you. How are you looking at these major IT companies, especially after all the round of volatility that we are witnessing?
I think, Kavita, clearly from a longer term perspective, Indian IT companies would definitely have to redefine their objectives and would definitely have to look at AI as a new strategic tool. In fact, yesterday, you must be aware, Infosys announced a new tie-up with Anthropic, and TCS has also said that AI will now figure a large percentage of its revenue. My sense is that these businesses are going to gradually get ramped up, and I think Indian companies are ideally positioned. The kind of fall we saw in these companies was because of a scare that a lot of business would go away from these companies. This is not so. My sense is if you have a 12 to 18-month view, I think things will definitely start gradually. In fact, in TCS, I would not be surprised that looking at the current level, the management could even think of a buyback because they are sitting on a huge amount of cash, which again could be used, profitability for the shareholder. So I think the investor should add both Infosys as well as TCS. My sense is it may take a little bit of time, but the next 12 to 18 months, definitely the risk reward could get better.
All right, Himen, a quick take.
Support at 2600. It's taken support here. If this level holds for the rest of the month, I think that would be a small technical green shoot. Otherwise, a close below this could be another 150 points on the downside. So I wouldn't rush to buy things. It will take time for everything to settle down.
All right, so that's the view coming in on TCS and the IT pack. But with that, it's time for a quick breather. Don't go anywhere. We'll be right back. Welcome back. You tuned in to Buy Now, Sell Now, where we're getting all your stock-specific questions answered. Let's resume with all the questions that you've been sending us. Well, this one's coming from Rajesh from Bangalore. He says he wants to know about Kalyan Jewellers' target price for the next 2 months. He's holding 3,000 shares at an average price of 420. Himen, what's the target price for Kalyan Jewellers? He has a time horizon of next 2 months. He is clearly sitting at a loss right now. What should he do?
435 target price for Kalyan Jewellers in its time frame. Ankita.
All right. Let's move on and let's take this question from Mr. Balan. He's a senior citizen, and once again, IT stocks, I think that's on radar for all our viewers as well. ITCS, Infosys, LTI, Mindtree, and Birlasoft. He has all of these stocks in his portfolio, and which ones he should be selling. And he also plans to switch to FMCG instead of IT now, HUL or Nestle, or banks maybe, which is SBI and HDFC is what is his preference. So he just wants you to strategize his particular move. I'm not sure for what time frame he's looking at being in IT, but just in case if it's an exit strategy that you both might want to recommend, what should be the next sector on radar? I'll start with Avinash.
I think I would prefer the banking pack. I think both from the private as well as the PSU side. I think from the private banking side, you look at companies like ICICI Bank, and from the public sector side, I think companies like Bank of Baroda, Canara Bank, or SBI. These are stocks which I think would now attract a lot of traction, considering that the fourth quarter is expected to be quite good. And as far as the FMCG pack is concerned, Kavita, I think he could look at stocks like Dabur, Marico, Godrej Consumer. I think definitely the tailwind is positive. We are seeing good commentaries coming from the companies in this sector, and the fourth quarter should be reasonably good. So I think FMCG sector is also something which you should look at. I think this could be a good defensive bet, banking and FMCG.
All right, so that's the take, and Mr. Balan can switch accordingly. But then, Hemen, what's going to be your recommendation? He plans to sell off entire IT pack and move on to these defensives. Where should he move according to you?
FMCG makes sense. I'd agree with what Avinash said. I would also like to add a couple of defense stocks and a slightly higher strategy, a dark horse, something in realty for a couple of years.
All right, moving on then. This is an interesting question coming in from Vinay Hembavi, who's writing from Pune. Firstly, he has two questions. One is on L&T. He is holding it from a buying price of 3,224. He wants to know what would be the target for the next 1 to 3 years for L&T. And the second part is the interesting one. He wants to invest 15 lakh rupees in semiconductor, data centers, defense and alternative energy stocks for investment. What would be the recommendation? Now, Avinash, I'll come to you for this one. Firstly, we'll talk about L&T for your 1 to 3 years of perspective. And then, are there any recommendations? He has 15 lakhs to invest in stocks that are semiconductor facing or data centers or the defense names that you would like to recommend?
No, I think first of all, as far as L&T is concerned, I think he's got in at a very attractive level. I think he should sit into the seat and not sell any share, because according to us, I think L&T is going to be a structurally very big opportunity in terms of defense, capital goods, infrastructure. At least on a very near-term basis, we could see levels of 4450, 4500 over the next 12 to 15 months. The order book is good. The working capital management has also improved. So I think you could expect a very strong Q4 number also. And plus the outlook for FY27 looks good. As far as data center stocks are concerned, there are companies like Anantraj, which have been beaten down very badly, currently trade around 540, 546. I think that could be a good bet, to bet on the AI kind of approach, which is now being looked at every company, because data center is the basic requirement for any AI provider. So I think in this space, Anantraj looks pretty good. And on the defense side, I think we should look at stocks like Bharat Electronics, typically a Hindustan Aeronautics, or even shipping companies like Garden Reach. Typically, I think all these companies have got a very strong order book and would give a good traction over the next, say, 12 to 18 months.
So that's the recommendation coming in from Avinash. And with that, it's a wrap also on the show. Thank you so much, Avinash and Hemen, for taking your time out and helping our viewers today. All right, time to sign off on this edition of Buy Now, Sell Now, but then a small break, and after that, we'll get you market set news. Stay tuned.